Boris, it's always great to see you and get your thoughts. You got a global view on this. Let's start with Danone. I know them for yogurt, but it's a European company. Not a lot of exposure here for the stock. Buy or sell?
Buy, because in this kind of a situation, you basically want to be long companies that source their product in euros and sell in dollars, which is the classic case of Danone at this point, because obviously most of its operations are in Europe, but it has a very, very large North American presence, and it's trying to expand and improve its operations here. So to me, it's a little bit of a sleeper stock, but I think should really benefit from positive FX exposure, and has a 3.75 yield. Very, very nice, attractive trade at this point, in my opinion.
All right. Nice and clear take on that one. What about Diageo, Boris?
I love Diageo. I know it's a little bit expensive, although it's far less expensive than it was a couple of months ago. Diageo is another one of those companies that has sourcing in pounds and euros because it owns Guinness, Tanqueray, Johnny Walker, great brands, and obviously 55% of its sales are in a North American segment, where, by the way, spirits continue to grow. And I think that's going to be a very, very strong stock, really not just for now, but for the long haul. But in the meantime, really gets a nice bump from positive FX exposure, in my opinion.
Premium spirits has been a trend that might continue during or after the pandemic as well. Okay, so the last one here is a consumer staples names that many of us know here in the U.S. They make a lot of products we know. It's Mondelez. What do we think about that dollar story exposure there?
Well, here it's the problem in reverse, because a lot of the sourcing is in dollars, but the almost 40% of their sales are to Europe and 30% to Latin America and Middle East and North Africa. Those are going to be very troubled regions, in my opinion. The consumer in those regions is far worse shape than the American consumer. Labor markets there are much worse. Real wages are going down, and they're starting to see a decline because these are all discretionary goods. I mean, you're just not going to buy chocolate if your last dollar has to go towards just spending real food. So I think Mondelez is going to possibly surprise to the downside. To me, this is one I would step away from. It's trading at the lower end of its range, and it could break the lows as a result of negative FX exposure, in my opinion.
All right, dollar plays. Boris Schlossberg in 3 Stock Lunch. That's a buy for Danone, a buy for Diageo, and a sell for Mondelez. Thank you very much. We'll see you soon.